Hi guys, it's Bullish Villa Academy here again. And so in today's class, I'll be teaching you everything you need to know about the market structure. It's going to be an interesting class, so I want you to give it rapt attention. So we'll be looking at the definition of market structure. We'll also be looking at the types of trend that we have. So these are the things that we'll be looking at in this class. So without much ado, let's get started. Alright, so market structure. Now, what do I mean by market structure? Now, there are some important topics in Forex that are indispensable, and market structure is one of them. So you can't talk about Forex without talking about market structure. And that is why I want you to pay rapt attention to this class, and I want you to stay to the end of the class, because I'm going to be revealing a lot of things to you. Alright, so we have the market structure. So now, what do you mean by market structure? From the definition we have here, market structure means an overall framework or pattern the market price is forming. An overall framework or pattern that the market price is forming. Now, the market structure helps us to show price movement, because if you look at the chart, price is always moving from one point to the other. Now, price is either moving upward or downward or sideways. So, price is either moving upward or downward or sideways. And that is what market structure is talking about. It's letting us to know the movement of price. The movement of price on the chart forms a structure, and it is from that structure that we now begin to carry out our analysis and make decisions. So the movement of price on the chart will form a structure, and we traders will now make use of that structure to carry out our analysis to make decision whether to buy or to sell. Alright, so now under the market structure we have the three types of trend. Number one is we have the bullish or the upward trend. We have the bullish or the upward trend. Then we also have the bearish or the downward trend. Then we have the consolidated or the ranging market. Now we are going to start with the bullish or the upward trend. Now under the bullish or the upward trend, the market is giving us a series of higher highs and higher lows. A series of higher highs. So we have something like this: an impulse, correction, impulse, correction, impulse, correction, impulse, correction. So this is an example of a market in an uptrend. Can you see? Impulse, correction, impulse, correction, impulse, correction, impulse, correction. So we have the higher highs and higher lows, higher highs, higher low, higher high, higher low, higher high, and the higher low. So now if you look at this market now, or this trend, this is the last low. So this is the last low here. and this is also the last high. So this is the last high, and this is the last low. Can you see? So we have impulse correction, impulse correction, impulse correction, impulse correction. Now in an uptrend, the low sustains the trend. Now this is the first low, second low, third low, fourth low, and the fifth low. Now in an uptrend, the low is not expected to be taken out. Can you see? These lows, you can see they are not expected to be taken out. You can see that the subsequent lows, like this is the first low, this is the second low. So these lows now, they are not what? They are not expected to be taken out. This is second low. The second low is higher than the first low. The third low is higher than the second low. The fourth low is higher than the third low. The fifth low is higher than the fourth low. So we have impulse correction, impulse correction, impulse correction, impulse correction. So this is the last high and this is the last low. Now, if we are starting from here, we have impulse and we have correction. Then we have another impulse. Now this was the first higher high that we have here, and now this new impulse has taken out this high. Then we have what is called a break of structure. Please, I want you to follow me. Can you see? So we're having a break of structure here, which is called BOS. So we have our first break of structure here. So we have our BOS, which is our break of structure. Then we have a second break of structure here. Can you see? So then we have a third break of structure. Can you see? So first break of structure, second and the third. Like I said, this is an uptrend. So the low sustains the trend in an uptrend. You can see the first low, the second low, the third low, the fourth low. So these lows, they are not expected to be taken out. They are not expected to be taken out. So for instance now, this is the high, the last high, and this is the last low. So if for instance now we have price do something like this, you can see that now we are still within this range. Can you see? So no structure has been broken, you understand? So we are still in the uptrend, you understand? So if the price does something like this, you can see that we are still in the uptrend. Now this low is still protected. We still have this side. So if price now comes to take out this low here. Now once price takes out this low, it means that we are having what is called a change of character. That means we're having what is called a change of character. A change of character is also known as CHOCH. Can you see? Change of character, or you call it MSS, market structural shift. Change of character or MSS. So let me write it for us. Change of character or market structural shift. So we have the change of character or market structural shifts. So this low has been taken out. That means that there is now a change of character or a market structural shift. So since this low has been taken out, so we now have a new trend. We now have impulse, correction, impulse, correction, impulse, impulse, correction, correction, impulse. You see? So now this is a downtrend. This is an uptrend. This is a downtrend. This is impulse, correction, impulse, correction, impulse, correction, impulse. Now this is a downtrend. So in a downtrend, the highs sustains the trend. Can you see? Because this high must not be taken out, just as the way we have it here. The lows must not be taken out. Can you see? Now also these highs must not be taken out. So here we have the impulse, we have the correction. Can you see? So what we want to do is that we want to identify the break of structure here. This is the first break of structure here. Can you see? So this is the first break of structure here. So this is the second break of structure. This is the third break of structure. Can you see? So we have our BOS. We have our BOS here. We also have our BOS here. So like I said, for the downtrend, the high sustains the trend. You can see the high should not be taken out. So impulse, impulse, correction, impulse, correction, impulse, correction, impulse. And like we all know, in an uptrend, you look for buying opportunities. In a downtrend, you look for a what? You look for a selling opportunity. So if, for instance, when price got here, we now had something like this, impulse, and this high now has now taken out this last high. Can you see? That means there is now a what? A change of character or a market structural shift. Can you see? Change of character. So then we wait for a pullback before another impulse. Can you see? So here now we're having a what? A change of character. So we write CH. Let's use capital letter. CH. So we have a change of character. Now don't forget that the reason why it's called a change of character or MSS is that the structure has been changed from either a downtrend. For here now, the structure has been changed from a downtrend to an uptrend. Can you see? So that's why it's called a change of character. And that was the same thing that we have here. Can you see? Because this last low was taken out. This last low here was taken out. So we had a change of character. So we had impulse correction, impulse correction, impulse correction, impulse, then impulse. But it has taken out this last high. Don't forget, like I said, the highs in a downtrend sustains the trend. So the high must not be taken out. Once the high is being taken out, that means we are now having a change of what? A change of trend, which we now call change of character or market structural shifts. Now, you may want to ask that what's the difference between the BOS? The BOS means break of structure. Don't forget. The BOS means break of structure. So BOS means break of structure. And the other one, MSS, means market structural shifts. And CH means change of character. So you can see this is an uptrend, this is a downtrend. Now we have the BOS, which is the break of structure. This was the first structure, impulse correction. Then we had another impulse. This new impulse has taken out this last high and it has created a new high. And that is why we usually call this higher high. Then we had a pullback or a retracement or a correction. Then we had another impulse. This new impulse has taken out this last high. So it's giving us another new high. So in a break of structure, we take out the recent high or the last high or the last low, and it will still continue to go in that same direction. You can see for a break of structure, we still have the trend, we still have the uptrend. So in a break of structure, we take out the last high or the last low, and the trend will still continue. Can you see what we have here? We had a break of structure, and the trend still continue. We are still in an uptrend. You understand? But for a change of character, whenever we have a change of character, it means there's a change of trend. Can you see here now? There was a change of character here. So it means there's a change of the trend. The trend has now been changed from an uptrend to a downtrend. The trend has now been changed from an uptrend to a downtrend. Can you see? So for a change of character, the trend will be changed. You understand? The trend is going to be changed. But for a break of structure, the recent high or the recent low will be taken out, and it will still continue to go, and the trend will still continue. For instance, this is a downtrend. We had impulse, correction, then impulse. So this new impulse has taken out this recent low here. Can you see? It took it out, then it created a new low, lower low, then we have a lower high. You can see, then we had a lower low. This new low has taken out this last low, and the trend still continued. Can you see? So for a block of structure, the last high or the recent high or the recent low is being taken out, and the trend still continues. But for a change of character, can you see that for a change of character, there's a change of trend? Can you see? There's a change of trend for a change of character. So I hope that is very clear. Now another point I want us to note here is that for a change, for what's it called now, for the market structure, now this is an uptrend. We have impulse, correction, impulse, correction, impulse, correction. For it to have an LD market trend, for instance, for an uptrend, the correction must be 50%. The retracement, now this is called correction or retracement or pullback. Can you see? Correction or retracement or pullback. So we have the correction. Okay, let me type it here so that you can see it. Correction or retracement. Or pullback. So we have the correction or the retracement or pullback. So for an LD trend, the correction is supposed to be at least 50%. You know, for this, can you see, at least it's supposed to be like 50% for an LD pullback. And if you want to ascertain that, you make use of your fib retracement tool, which you have here. Come here, can you see fib? Click on it, then you come down. So if we look at this now, you can see that this is the midpoint, which is 0.5. So you come here, you click on your horizontal tool, you place it on the 0.5. So if you don't know how to use the fib tool, you can go and watch the last video I did. So I did a whole video on fib retracement tool. So I want you to go and watch it, and it's very simplified. Once you watch that video, you become a professional when it comes to using the fib tool, and you can also teach other people too. So you can see 0.5. Can you see? Then you can see the retracement got to 0.5, got to 0.618. In fact, it almost got to 0.786 before it started going up. So this pullback now, this is an LD trend. Can you see? So for an LD trend, the pullback should be at least 50%. The pullback should be at least 50%. For an LD trend, at least 50%. So let's check the second one here. Okay, you can see this one is at 0.61, okay, because the midpoint is 50%. Can you see? Our midpoint is 50%. And you can see that it got there, then it came down to 0.618 before it started going up. Can you see that? So for an LD pullback or for an LD trend, the correction, so that is that for an LD trend. So the pullback should always be what? At least 50%. At least 50%. But the reality is not always the case on the chart. No, the reality is not always the case on the chart. For instance, I look at this downtrend now. Impulse correction, impulse correction. So if you want to use a FIP 2 now, you can do the same thing. We come here. We want to check. So we want to check the pullback. You want to see whether I got to 0.5 or it didn't get there, or whether I got there and it surpassed it. So that is why we are making use of that FIP 2. So we want to check our pullback, the level of the pullback. Like I said, for an LD trend, the pullback should get to at least 50% before the continuation. For an LD trend, the pullback should get to at least 50%. So you can see here now. Let's get our horizontal too. Look for the midpoint, which is 50, 0.5. You drop it. Can you see that this one now? It got here. It got to 50. It got to 0.6. In fact, it got to 0.78 before the impulse move. So can you see? So you use the Fibonacci tool to check the accuracy. Can you see? Alright, so that is that for the uptrend and the downtrend. That is that for the uptrend and the downtrend. Then we also have the consolidated or the ranging markets. Now for the consolidated or the ranging markets, the price is moving between the support and resistance level. The price is moving between the support and the resistance level. We have something like this. So this level is the resistance level. This is resistance level, or you can call it zone. Then we have the support level. So you can call the support level or the demand level. So we have the support level. Please let's pay attention. Support level or zone. Support or demand level of zone. Then for this we have resistance or supply. So any name you want to use is fine. So we are looking at the consolidated or the ranging market. So we have price moving this way. Can you see? This is the way price is moving in a ranging market. So we have this demand zone. At the demand zone, you want to buy. At the support zone, you want to sell. So price is moving sideways. Price is moving sideways in a consolidated market or in a ranging market. Now it is advisable that whenever you see this type of market, you stay out of the market. Whenever you see a market like this, you want to stay out of the market. Although there's some people that usually trade it, but it's advisable you stay out because it's not giving you a clear direction. So if the market is an uptrend, yes, you know that okay, this market is an uptrend and you are looking for buying opportunities. If the market is in a downtrend, instead okay, this market is a downtrend and you are only looking for selling opportunities. Or whenever the market is in a ranging or is consolidating, then it's just moving sideways, so you don't want to trade, so you want to stay out of the market to be safe. You want to actually stay out of the market. Okay, so for instance now, okay, let's look at some examples here on the chart. This is Euro USD. Or let me go to okay, so this is Euro JPY. For instance, this is Euro JPY 1 hour time frame. So this is an uptrend. Can you see? A push, a pullback, higher high, higher low. Can you see? Higher high, higher low. So this is an example of an uptrend. Can you see? So for a trend like this now, you are only looking for buying opportunities. You are waiting for the retracement, then you look for a buying opportunity, then so that you can catch the move from here to this place. Then when it starts retracing and if you got to the end of the retracement, you are looking for another buying opportunity so that you can catch the move from here to this place. Then once you retrace also, you are looking for another buying opportunity so you can catch the move from here to this place. So this is an example of a bullish trend. Can you see? Coming. Let me look for a neutral. For instance, now this is GPPAUD. Can you see? Now this is an example of a downward trend. Can you see? So this is what you always. This is the way the market looks. This is what you always see. Can you see? Impulse correction. Can you see? Impulse correction. Impulse correction. Impulse correction. Impulse correction. Then impulse. So you can see this is an example of a downward trend or a bearish trend. And for a downward trend, you are looking for selling opportunities only. Selling opportunities only. Once there is a retracement, you are looking to sell. Once there is another retracement, you are looking to sell. You understand? So this is an example of a downward trend. Then we also have the ranging market. Let me look for an example of a ranging market. Okay, correct. Now look at this chart. This is an example of a ranging market. So look at this. This is an example of a ranging market. Let me use this. This is supply. This is demand. Can you see? And you can see the price. You see it's moving up and down in this range, in this enclosed range before we had a breakout. Understand? So this is a perfect example of a ranging market. So a market like this, you advise to stay out of the market. You actually advise to stay out of the market. So now there's this other thing I wanted to I'd like to explain to us. So let's go back to where we were. So we've looked at the bullish, bearish, consolidated, or ranging. So also note, in Forex, market structure is the foundation of price action trading. Correct? So you can't talk about Forex trading without talking about the market structure. In fact, market structure helps you to make decisions, helps you to know where the trend is heading. gives you the definition of where the current trend is heading, because once you know where the trend is ending, then you want to make your decision. If it's a bullish trend, you know that okay, you're looking for buying opportunities. If it's a bearish trend, you know that okay, you're looking for selling opportunities for a bearish trend. So that's the advantage of the market structure. Market structure is the foundation of price action trading. So it helps us to know whether to buy, to sell, or to stay out of the market. So also we have the strong, the weak, and the intermediate trend. Now I'm not going to be teaching that here. That is going to be for my mentorship class. So if you know that you're interested in my one-on-one mentorship, you can drop it in the comment section. You can drop it in the comment section. There's a link there. Okay, there's no link yet, but you can just drop it in the comment section, or you can check the link around this video. You can check the Instagram or the X link I dropped there. That's my personal account, so you can just add me up and send me a direct message. I'm going to respond to you. That's for the one-on-one mentorship. So yeah, that's for the one-on-one mentorship. So I'm not going to be teaching the strong, the weak, and the intermediate trend here. So that's going to be for my one-on-one mentorship. Alright, so this is where we are going to end to this class. So please, I want you to subscribe to this channel and also turn off the notification button, so that whenever I drop videos like this, you'll be the first person to get notified. Understand? Turn off the notification button, subscribe, and also share to share. And please, like I said, don't forget to subscribe, turn on the notification button, and also subscribe, like, and share. Alright, so and also please, I want you to watch this video over and over again, and also go on the chat to backtest and practice. Now videos like this, you don't just watch once and and that is it. No, you come back to watch and watch and watch until you get the understanding of what the topic is saying. Alright, so thank you for your time, and I'm going to see you in the next one. Bye bye.